The new pipeline tariff regime kicks in. The amended norms allow for tariff hikes every year against a one-time levy earlier, as a result of which brokerage house Citi says this development favors GSPL as uncertainty over these norms was the key overhang. It has a buy rating on the stock, and the stock is off highs though.
A big block deal was seen in Nykaa in early morning trade as pre-IPO investors. They continue to sell. 1.8 crore shares change hands. Sources indicate that Lighthouse India has sold its stake in the company. It was a clean-out trade. Paytm, meanwhile, hits a lifetime low as the stock corrects 10% in early trade, now down close to 8%.
After a 20% rally in trade yesterday, Ease My Trip is the gainer, which has up almost another 11% today. The management is bullish on growth, says the company is showing in the second half of this year, which is Q3 and Q4, will be better than what it was.
Jubilant Food looks to expand its presence in Nepal via a subsidiary. JK Paper rallies as it's set to acquire packaging firm Horizon Packs, as well as another one.
There is a stellar listing for Keynes Tech. Stock debuts with a listing gain of almost 32% to its issue price of 587 rupees a share. The stock, however, has given up some of its gains, now still sitting with a gain of almost 17%.
Hello and welcome to Chartbusters. It's a Tuesday morning. We started off more or less flattish, but we have picked up pace in the last 20 minutes or so. We're at the high point of the day. The Nifty is up close to around 50 points. Pretty good going out there. You have stocks that are moving around. Ultratech Cement, well, that's the one that's moved to the high point of the day. And the mid-cap index, Mangalam, after a while, I'd like to see this actually at close. The number of stocks that are advancing have been, trailing the number of stocks declining. So let's see whether or not the breadth of the market as of now is positive. That's the advanced decline ratio. They're getting a little bit closer. Let's hope they don't cross or kiss.
Well, we will monitor that. But, you know, Nigel, you speak about cross or kiss or whatever in the first couple of days of the week itself. Interesting to see that. But, you know, it's not a bad day, to be honest. We have recovered from the lows. Importantly, let's see whether we sustain here or not. And if we do, there would be a case for a fair amount of short covering, given the sort of calls that FIs have written over the last couple of trading sessions. But that's about the markets. Let's talk about an individual stock, a special segment where we get you ideas for profit coming in from our colleagues at Money Control Pro. Neha Dave joins in.
Today's stock idea is DCB Bank, which reported a strong set of earnings in Q2 FY23. Profit growth was aided by healthy pickup in the loan book growth, better margins, and low credit cost, partially offset by higher operating expenses. The bank's net advances grew by 18% YOY as of September end. Management intends to double the balance sheet in the next 3 to 4 years, which translates into a compounded annual growth of around 20 to 25%. Bank's deposit growth was also healthy at around 16% YOY and was much ahead of the banking system deposit growth. The more encouraging was a strong growth in the low-cost CASA deposits. The bank's asset quality trended better with decline in the gross and the net NPA ratio. Management has indicated that restructured advances under moratorium will decline from over 1,800 crore currently to less than 400 crore by March 23. With easing of asset quality stress, credit cost is likely to remain low and drive earnings in the near term. Over the medium term, improvement in the profitability will be driven by better operating efficiency. DCB Bank's stock has rallied more than 30% in the past 3 months. Despite a sharp rally, the bank is still trading at a valuation of around 0.8 times estimated book value for FY24. Which is attractive considering that return on asset has improved to 1% and return on equity is in double digit now. Overall, with multiple positive triggers, DCB Bank's valuation can move above one-time book value, which will lead to a meaningful stock upside. Long-term investors can accumulate this stock.
Right, Neha, thanks a lot for that. With that, let's talk about the stock on our radar right now. The management of Keynes Technology is joining in. Remember, the company has made its debut today on the bourses with a listing gain of almost 30-odd%, still sitting with gains of 18% over and above the issue price of 587. We do have with us the managing director, Mr. Ramesh, and Savita Ramesh, who is the chairperson of the company. Thanks a lot, ladies and gentlemen, joining in for this, and congratulations on what seems to be a good listing, and welcome to the stock markets. But now is where the real journey begins, because now everyone will be eyeing what you guys do in the future. And that really is my first question. You know, I mean, you have an order book of almost 2,300 odd crores, which you have said will be executed over the next year and a half or so. Just wanted to understand your order inflow pipeline for the remainder of this year and next year as well? What kind of order inflows are you targeting?
We are seeing similar order inflow for the months to come in. I'm also seeing our marketing team is able to take into newer contracts, and whatever growth we have projected, I'm very, very confident that we should be able to do that.
Okay. All right. If you could just revise Mr. Ramesh and Ms. Savita, thanks so much for joining in, and congratulations. We like investors to make a lot of money, and y'all have started off on the front foot, smashing it out of the park, so to call it. But you're saying you're looking at revenue growth. So could you tell us what is the outlook for this year? And also I was noticing your margins have steadily been improving. So what's the margin band we should be working with? Go ahead.
We are expecting to do about 1,200 crores of revenue this year, and on the margins, I would like to say that our strength is diversification, and since we are in the diversified verticals of business, and there is a very good mix between the automobile, industry, and railway verticals, we are sure that we will be able to keep our margins going strong.
All right. If you could define what is strong would be great. You are currently in low teens. Was wondering if you guys could go, above 14%, 15%. And I ask this primarily because you plan to invest in backward integration as well. By when does that come on stream, and how much does that, support your costs by? Can you give us a sense?
We will be putting up the backward integration plant. That is, we are looking at a bare PCB plant, and that will be within the next 12 to 18 months, the plant will be ready. And with that, we feel that there will be a slight improvement also in the margin, because currently we buy about 8 to 10% of the bare PCBs as our raw material, and this is going to help us also improve on the margins.
By how much, ma'am?
By another 1%.
Okay, so by FY25 odd, your targeted margin will be how much?
We are targeting to improve our margins to up to about 14.5% by FY25.
Noted that point. What about exports? There seems to be an opportunity out there as well. It's been in the vicinity of around 20 to 25%. Give us a sense about exports. How do you see that contribution moving up? And also tell us, you'll import some part of your raw material, you're also exporting. So net, this rupee depreciation, is it good or bad for you all?
Coming to the export market, though the markets are talking about recession globally, but we are continuously monitoring. Every month there is a team meeting up with the export clients to find out what the status is. So far so good. For us, everything has been favoring us. Since we have marquee clients, from their exports to get through is easy, because whatever we developed here, it is for global requirement. So that is one advantage of this business. And globally, this has grown like this only.
But can you specify what kind of contribution can it do? I mean, it's good to hear that everyone's talking about a slowdown. You're not witnessing that. Goes to show some bit of a strength in your business. But what will the contribution be on exports, and also the margin difference between exports and domestic business?
See, because of the exports, there is a natural hedging. So that is the only benefit I am seeing. Otherwise, exports versus domestic market, the margins are almost closer to that. Having said that, domestic market is in a fast growth rate, because many of our clients wants to localize things, so they want to stop imports. So that is benefiting industries like us, thanks to the government policy makers.
Right. Mr. Kunikanan, you joined us when the IPO opened about 10, 12 days ago, and you did speak about strong potential in your medical electronics business, which currently is about 1%. You said it could scale all the way up to 8 to 10%. Just wanted to understand, I mean, by when does it scale to 8 to 10%? Secondly, will that be done organically, or will that be done inorganically? Are you looking at some people there? And thirdly, what does it do to your margins? Is this a margin accretive business for you?
See, what we are going to do is we are going to partner with companies and take this business forward. We have also aligned with the partners in the Europe as well as in the Asian origin to get in more and more customers. We are in the last stage of finalization with a large client. So this will take our business to around 5 to 6%. Plus locally also we are looking at medical business being grown.
Okay, that's about...
Medical business normally is with the higher margins. Always 3 to 5% extra than the industrial verticals and automotive verticals.
So this year you will end between 3 to 5% of your overall business by medical, and 8 to 10% happens by FY24 or 25?
25, okay. Because these markets to develop, it takes long time. The gestation period is very high.
All right. You know, sir, the buzzword has been defense. You're on the offense today. But, you know, from defense, aerospace, outer space, very small proportion of your money is coming in from there. How do you see this vertical move up? Because clearly there's a lot of growth out here and a lot of focus on this space here in India. Go ahead.
On the aerospace defense market, we are a player. Only thing is our turnover in other areas are going up. Because of that, it is hovering on around 2 to 3%. However, I am confident by FY25, this will touch a 10% level.
Interesting, because 10%...
Because we are working on new product development. We are working on new product development for our clients, and which should be completed in a year's time.
That will be interesting. 10%, 8 to 10% coming in from medical, 10% coming in from aerospace and defense, etc. And the remainder of the business, I presume, would stay in the similar proportion as it is right now. Final question from my end then, and this one to you, Mr. Ramesh, that, you know, the proportion of your business which is dependent on sourcing from Taiwan, just wanted to understand, I mean, what are you doing to de-risk that? Because going forward, if there is any geopolitical problem, your business stands to, you know, lose from that, right?
Yeah, basically the process of de-risking that we have done for the shortage of components coming in from Taiwan and China is that we have focusing on a longer lead time order book, and this helps us to ensure that we get the components in time and we can do the delivery faster to the customer.
How much comes in from China right now, and how much do you...
In the event?
About 10% of our total buy is from China.
Okay. Go ahead, Mr. Kunikanan, you were saying something.
Yes, in the event of any geopolitical situation also, 3 to 4 months we are fully covered. So we are also looking at various other methods of finding alternate buying path, which we are working on. Nothing is still done yet.
And is all of that covered in the contracts that you have to clients, in the sense that, for instance, if there is anything and there is an absurd rise in the price of things that you buy, are you able to pass it on to consumers, or will you take a margin hit on in that situation?
Yeah, there is a passover to the customers. So whenever there is an increase in price, the buying price because of non-availability of components or because of the increased lead time, we work with a PPV, that is a purchase price variance, passover to the customers.
Okay, all right. Thanks so much for joining in. Wishing you all the best. It's been a good debut for you all, and we look forward to chatting up with you rather soon. We're going to hold you all on to these numbers, expecting margins to improve to around 14.5%, ending the year at around 1,200 crores, and things looking up from here on. Well, on that note, though, we'll slip into a short break. You come back, we'll continue our focus on markets and stock-specific action.
Welcome back. You're watching us here on Chartbusters. The market continues to do well. A bunch of stocks actually which are spiking right now. ISMT from the broader markets up 12%. Most of the gains have come by in just the last few minutes. Some volumes picking up on that counter as well, and as a result of which it's swum into our Ken. The other one is Pratap Snacks. That's the one which is doing well. Remember, reported numbers last week, a decent set. It did show an expansion in the margins, and going forward, margins look good for these companies as palm oil prices decline as well. So that's the one which is doing well too. But in terms of market technicals, what's the view? We do have Shilpa Raut with us. Shilpa, what do you make of this recovery that we've seen from the lows, and do you think this is sustainable, or are we still in that range on the frontline indices?
Good morning, Manglam and Nigel. As of indices, there's nothing much to say and nothing much to do because both are moving completely sideways, and Nifty and Bank Nifty both again completely on the edge. Either we break 18,200 and sustain below that, and Bank Nifty below 42,000, then only we'll see some sort of profit booking aggressively coming for targets of 1700, 700 to 18,000 to 17,700 on Nifty, and Bank Nifty below 42,000, you will see targets till 41,500 to 41,200. But as of now, it is completely a no trade zone.
Okay, no trade on the index, but Shilpa, I'm sure you'll manage to dig out a couple of stocks that could do well. Run us through the list.
Yeah, actually, I have two buys, and both for the December futures. I'm long actually on Asian Paints now. Asian Paints on December futures trading at 3135 now. It has come out of a consolidation and it is actually holding up quite well even in all this choppiness. So I think one should go long here for targets of 3180 to 3230 with a stop loss of 3080. And again, another buy is SBI Life, again in December futures trading at 1240 zones with a stop loss of 1220. I think one should look for targets of 1277 to 1294.
All right, we take that point. Thanks a lot for joining in, Shilpa, and giving us your picks on the stock front. The indices, there's not much to write home about. But on that note, actually, let's also talk about a quick programming note. To fully commit to the cause of bridging the gender parity gap at the workforce, CNBC-TV18 is all set to lead charge with a one-of-a-kind mega initiative, Future Female Forward, the Women's Collective. Presented by HSBC India, the initiative will be officially launched through an exclusive on-ground event on Friday, that's the November 25th, at the St. Regis, Mumbai, in presence of Shireen Bhan, who's the managing editor of CNBC-TV18, Mr. Hitendra Dave of HSBC India, and other women leaders of India Inc. Also in attendance will be some of the most influential voices from the business, entrepreneurship, and entertainment spaces. Don't forget to tune in on CNBC-TV18 on Friday, November 25th, 5:30 p.m. onwards.
Well, let's slip into a short break. On the other side, we'll get you more on the markets and stock-specific action.
Welcome back. VMart Retail is one of the stocks which is doing well from the broader markets. In fact, the Nifty is managing to hold on around that 18,200 mark. But a bunch of stocks which are buzzing are GSPL and GAIL on the new gas tariff regime that has kicked in. What does that mean? Who does that impact positively? Sonal joins in with all the more details. Sonal.
Thanks a lot for that. Well, yes, these pipeline tariffs, it's positive for the likes of GAIL and GSPL, which are the operators of gas pipelines in the country. To tell you what the news is, PNGRB has notified these natural gas pipeline tariff, and this is applicable with effect from 18 November 2022. While there are a lot of changes, I'm just highlighting the important ones here. The first is that there is discontinuation of proposal to share 50% of the proposed incremental tariff revenues, and because of this, earlier these pipelines were not going ahead with expansion plans, but now that they don't have to share this revenue, MK says that this is positive for brownfield network capacity expansion. The second one is that transmission loss is now being considered versus earlier, where there's no provision to consider any gas which was lost in transmission, and MK says this would be positive for GSPL to the tune of 3% on its tariff, and they could account for losses right now in their PNL as well. There is a gradual annual escalation in tariff which is allowed now. Earlier it would happen with a break of around 3 to 4 years. There would be a lump sum hike in tariffs, but now it has been recommended that it will happen every year basis some formula. MK says that PNGRB wants entities to earn a reasonable rate of return, and their channel checks indicate that yes, pipeline operators are actually happy with the changes that have been announced. This will pave way for future expansion in the pipeline infrastructure. Unified tariff is also likely to be implemented from 1st April 2023, which is another positive for the likes of GAIL and GSPL. Citi says that new pipeline tariffs have positive implications for tariffs of GSPL and GAIL. Tariff policy favors GSPL more because that has been an overhang for the company. Introduction of integrated tariffs is positive for GAIL. GAIL, however, faces some earnings headwinds in the other three businesses which are commoditized, the marketing, LPG and petchem business. On the back of this, they have upgraded GAIL to a neutral from a sell, target raised to 90 rupees per share. However, they maintain their buy rating on GSPL with a target price of 335 rupees per share.
Okay, all right. Sonal, thanks so much for joining and giving us that quick update on those stocks. For the time being, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.